Hey, good afternoon, everybody. Welcome to our YouTube channel, Fast CPA and Consultants. I'd like to introduce our CPA, Fulton Abraham Sanchez. Welcome, Fulton.
Thank you. Good afternoon.
If you're visiting us for the first time, a few months ago, we started this Tax Talk series. You send us your questions through email, social media, we'll group them. And the topic for today is the tax strategies to move a company to PR. So are we ready to begin, Fulton?
Yes.
Awesome. So first question we have, how should you treat private business property taxes if you move the business to Puerto Rico?
Okay. In the case of Puerto Rico, they have a tax bill or tax law that is creating or is giving these tax breaks for people who want to move to Puerto Rico, but they have to become permanent residents there. And specifically, how should we treat private business property taxes if we move to Puerto Rico? In the case of Puerto Rico, there is this tax, this tax holiday or this tax breaks for people who move to Puerto Rico. Whenever someone with a business in the US goes from the continental USA and move the entire operation to Puerto Rico, there is a minimum tax payment that the person will have. In that sense, it will be only a 4%. But this is the catch. If you leave any operation in the continental USA, that will be separate and you will have to pay taxes according to the federal rates. That is customary for any business, any company doing business in the US. So the key to take this tax break in Puerto Rico is that you move the entire operation from the continental USA and you transfer all that offices, personnel, or you hire new people there in Puerto Rico, and you yourself move to Puerto Rico as well. And you are able to prove that you are in Puerto Rico, that you are a resident of Puerto Rico by having your kids in a school in Puerto Rico, by renting or buying a property in Puerto Rico, by going to a temple in Puerto Rico, and having in your bank statements expenses with the name of Puerto Rican vendors, Puerto Rican patrons. That is the ultimate proof that you are living in Puerto Rico, and you have to stay in Puerto Rico at least 6 months. These are the basic rules to move to Puerto Rico if anyone wants to enjoy the tax break that Puerto Rico is giving. Now, for private business property taxes, there is this tax break. In the USA, these private business property taxes are customarily managed by the counties. The counties in each state handle personal private business property taxes. It could be personal property taxes for companies, for example. The counties in the United States, they assess a tax for equipment, machinery to every company, and every company has to pay. They have usually a tax, they have usually a minimum, meaning that if you have, for example, $25,000 of equipment, you pay no taxes. If you have 25,000 and over, you will pay taxes. But that is let's say that is a responsibility of each county to assess this personal property tax for businesses. This is private business property taxes, also called personal property taxes. This is the property of the company separate from real estate, machinery, equipment that is taxable to the counties. That doesn't work for Puerto Rico when you move to Puerto Rico under this Act 22. The Act 22 is the one that creates this tax rate that when you move your operation and your business, you will be exempt from these taxes, and the only income tax business property tax is separate from income tax. Income tax is for the profits of the company. The only income tax that you will pay will be 4%, but you have to move there. So this is how the business property taxes is dealt in Puerto Rico when you move there. Remember, if we are referring to private business property taxes, this is the property of the business. This is machinery, equipment that the business owns, and that is taxable in the counties after, let's say, $25,000. That doesn't apply in Puerto Rico. You don't have that tax, at least for 10 years. That is the duration of the tax rate with a 4% income tax that you will have.
Got it. Okay, so moving on to our second questions we have. What are the requirements to enjoy the reduced rate for residents in Puerto Rico and requirements to move my company to Puerto Rico?
Okay. So the first one is that you have to demonstrate that you live in Puerto Rico. That is the basic assumption. Because just to give you an idea, there is an IRS for the entire continental USA, and there is an IRS exclusively for Puerto Rico. That is called Departamento de Hacienda. Same thing as it's called in Mexico, Departamento de Hacienda or Hacienda. So Departamento de Hacienda or the IRS in Puerto Rico does not, let's say, does not treat or deals differently with the U.S. resident with the residents of Puerto Rico than the IRS deals with the residents of the continental USA. So they are two separate institutions that they sometimes, most of the time, they do not communicate to each other because they are, Puerto Rico is an associate state. So that's why Puerto Rico has its own IRS, different from the IRS here in the United States, in the continental USA. So if to transfer your, let's say, to transfer from, let's say, from one, let's say, geographic place to another geographic place, you have to physically move yourself from the continent to the island of Puerto Rico. That is the first requirement. That is the only way that you are under the, say, the influence or the authority of the IRS in Puerto Rico, because they are two different separate institutions, two IRS. So if you live in the continental USA, because you live in the continental USA, you are under the authority of the IRS in the USA. And basically the US Treasury, because the IRS is a department of the US Treasury. So you are under the authority of the US Treasury, and for taxes under the IRS. That is one of the departments of the US Treasury. If you want to get out of that authority, you have to move to Puerto Rico physically there with your family, rent a house or buy a house, register your kids for a school there, going to a temple and spending your money there in Puerto Rico, so that you can prove with your bank statements, as we said before. So that is the first requirement for the authority of the IRS is not anymore over you. And when you move physically, you move with your family there, your business there, your employees there, or you're hiring employees there, you are under the authority of the IRS in Puerto Rico or the Departamento de Hacienda. So this is a transfer of authority that you have from one place in the continent to another place in the island. That's how it works. And the requirements for a company is that you move, you cut all your links in the continent, USA, and you open a company or you register the company your company in the US, you register the company in Puerto Rico, or you open a new company in Puerto Rico and you place all your assets or the business there. You transfer all the business of the assets or the businesses there. You can have, for example, a bank account here. The company can have if you're in Puerto Rico, you have a company in Puerto Rico, you can open a bank account here in Florida for your company. Some banks will accept you without any registration. If you are in Puerto Rico and you have no business here in the US, you can come to the US and some banks will accept an account without being registered in the state where you plan to be. In other cases, you have to register the company in the state. Same thing happens when you go from here, from the continental USA to Puerto Rico. You have to register the company from the state. In the continental USA, you have to register the company in Puerto Rico and then open a bank account in Puerto Rico for the business. This is for the company. And later on, if you want to completely cut off your contact with the USA, so you are only under the authority of the IRS, even close the company in the continental USA, and you keep doing business only in Puerto Rico. If later on you want to open an account in any other state, that will be fine. But remember, if you close a company here in the US, in the continental USA, and you move to Puerto Rico and you open a new company or you register the existing company in Puerto Rico and you open a bank account, you will need to transfer all the assets of the business, meaning the physical assets of the business be there and produce from there, or give a service from there. That is how you transfer first yourself and later the company. For example, if the company has or holds bank accounts in banks here in the USA and you register the company in Puerto Rico and you move all your activity to Puerto Rico, you can keep all those accounts open there, providing that the center of your business or business providing goods or services is in Puerto Rico, hiring people in Puerto Rico and in an office in Puerto Rico.
Got it. And for our last question, we have, what about if I am part owner of the business? I have a company tax recording in the US that it's in New York and I have an office in Florida. So if I move to Puerto Rico, I have the Puerto Rico advantage?
Remember that any move to Puerto Rico includes the business and you. In reality, the ultimate beneficiary, or how you can get this for sure, is by moving yourself from the continental USA and place yourself with your family in Puerto Rico. Because this is how you prove that you are a resident of Puerto Rico, that you have complied with the requirements of the Act 22. That is the sole requirement that you comply with, to prove that you have met the requirements of the Act 22 and that in fact you are a resident in Puerto Rico. But now, what happens if you move there and you move your business there, or you move there and then you have still business in New York and in Florida? Remember that if you have business in New York and Florida and those businesses make money, they create revenues and profits, you are still bound to the IRS in the continental USA because that business pertains to those states. In the particular case of New York, if that office creates revenues, you will be subject to the revenues. If it's for example, it's an LLC, well, it's an LLC, no, it's an LLC, or if it's an LLC, you will be subject only to the IRS because LLCs do not pay taxes to the state. Same thing in Florida. But if that is a corporation, you will be bound to the taxes in New York because New York does charge the state for companies, same thing in Florida. Florida does charge taxes for companies, for corporations. LLCs do not pay taxes in any state. But if you have an LLC in New York and Florida, you will be bound to the IRS in the United States, not to the Department of the Hacienda, because those two offices are producing income. If you have a corporation, New York and Florida, they both assess taxes for companies in the USA, for corporations in the USA. So you will pay taxes not only to the IRS, but also to the New York and Florida Departments of Revenue if you have a corporation. To avoid all that, you need to move your business from New York and Florida to Puerto Rico. And you can provide from Puerto Rico all those businesses, but you cannot have an office in New York or in Florida because and those offices create Revenue is those if they you have clients in New York that go and then pay to that office, then that income is there. Even having an office and non-creative revenue, it will be difficult to dispute with the IRS from New York and Florida, or from the IRS in the continental USA. It was difficult to dispute that that revenue is not from New York when you have an office in New York, same thing in Florida. So if you want to really cut all ties, close the office in New York, close the office in Florida, and move to Puerto Rico and have only one office in Puerto Rico.
Awesome. So, okay, that's all our questions for today. Thank you, Fulton, for the information and the time. If you have any questions, you can send them through email, social media. We even have an exclusive group on Facebook. We'll put the link down below. And thank you. We'll see you on the next video.